The Fed's cuts may not be enough. And in this video, I'm going to explain why. But before that, where are we with Bitcoin? Well, we are where we are. We are still ranging within the mid-range of the bull flag. Well, I'm not even too sure if it's a bull flag anymore. It's gone on too long. We seem to be on a slight downtrend going down. Or, you know what could be happening? A triangle could be forming, which could potentially state a higher leg up, or it could very well test the bottom. At this present moment, we really don't know what will happen. It's a bit stagnant out there. It's a bit stagnant in the news, and we don't know where it will go. Institutions, banks, central banks, the whole world is waiting for this interest rate cut to happen in the US. Nothing proves that more than this graph. This is the relevant level of expectation for a rate cut. It is the highest it has been for over 10 years. This shows that the market is desperate for a rate cut. It is desperate for liquidity. And my worry is that the amount that they will cut may not be enough. And what that could cause is something like the 2007 and 2008 crash, which I will show in this video. The reason why I say this, and the reason why I am getting further worried about the delay in the Fed's choice to cut interest rates, and with a further expectation that they are looking to cut only 25 basis points, is that if you look at the data, the increased unemployment, the increase in bankruptcies, the housing market going down, the increase in the government yield bonds, looking at various earnings of all the companies, including the Magnificent Seven, that have had to reduce the valuation of their companies, their stock valuations. None of this is conducive to what the Fed is saying. They're saying that CPI is good. They're saying that the Fed is in the right place. This could be a soft landing. PMI is working. Jobless claims are all good. Everything's going great. And they're using that as an excuse to delay this decision as far as possible and to put the interest rates as medium as possible. I genuinely believe that if the Fed only cuts at the maximum of 50 basis points and maybe 75, I think that this is going to be an extremely rough ride. This graph is extremely important, and it shows what happened in the 2007-2008 recession. Now, there are things here that are very similar to what we're going through right now. And I'm worried that the Fed will not act in the right way and be reactive to their own numbers. See, as you can see here, we see a effect on the market, something in there saying the PNB Paribas holding redemptions and investments, which is very similar like the carry trade. We see that the Fed, which I expect in the meeting in Wyoming, for them to say, okay, we see a downside risk to growth and we must increase liquidity. They will do a 25% basis drop, which is what they are stating, which will cause possibly a bit of a rise and then an extreme dump down, which I'm thinking what the situation is. The Fed will pivot and understand, oh my God, we've made a mistake here. And the Fed will overcut, which will cause the markets to jump back up again, which will be in the form of a bull trap. Then the next meeting, they will go, you know, things are going well. Things are going up. Things are fantastic. We don't look at previous data or what the market is happening. And then they will hold their level. They will hold their cut. And then all of the increase in interest rates will come all at once. All of the problems, the pillars will start falling. Things will start ramping up in such a way that we will see this massive capitulation down to the bear market bottom. This is what I think is a possibility if the Fed does not react aggressively. See, what you need to understand is that they took their time to raise interest rates. But don't forget the period before. We were at almost 0% interest rates for how long? And it took time to grow the economy. It took time for it to roll through, and we saw one of the biggest growths in the economy, in the world economy, that we've ever seen due to the money taps being turned on. Now, the key factor here is that we've progressively increased it to some of the highest interest rates per loan basis that we've ever seen. And they are, if they slowly take their foot off the pedal after such a long amount of hike, after the data is showing that things are extremely weak, then that rate cut is not going to do anything. And this could be a possible scenario that I would expect you to look for. However, I will say one positive point. After this, the growth was truly spectacular. It's just this point here is going to be the interesting part. So I'd be very careful what you invest into. I'd be very careful what you DCA into. I'd be very careful of leverage trade in general, in any sense of the word. But most of all, I would say follow and share these videos, because I show you things that most influencers don't. Anyway, I'm Alvarez, a 7-figure crypto investor. Like, follow, share. Everything else, pay me, please. Pay me with likes. Anyway, I'll catch you guys later. Peace.